This podcast is made possible by Avalara and Ledge.
Hello, this is Jason Quinn, CFO of Vendor. You're listening to the CFO Thought Leader Podcast.
This is episode 995.
It's not just the finance piece, but it's the decision support. And whether that's run through your FP&A organization, and whether it's run through business intelligence or business operations or revenue operations, you're seeing more and more CFOs kind of take hold of that information. And I don't mean to hide it behind a wall. I mean to democratize it and make sure that the people that are as close to the customer can make the decision as quickly as they possibly can. This is one of the things that, we've just reorganized. And, I not only have the accounting / finance group and FP&A, but there's the deal desk there. There's revenue operations. There's what we call data strategies, which includes business systems and business intelligence.
Hi, it's Jack. On today's show, we speak with Dan Murphy, CFO of Commercetools. The way Dan Murphy sees it, the CFO position demands that leaders always be kept on high alert. It's a mindset that had led him to habitually monitor updates and alerts related to key vendors, including certain banking institutions. And so it was in the first quarter of 2023, when Murphy recalls spotting a vague tweet hinting at possible financial trouble at Silicon Valley Bank. Despite the tweet's uncertain implications, Murphy recognized the risks inherent in solely relying on one bank. He took action. You'll hear that story and much more on today's episode. We'll begin after this. You know the feeling. A report deadline is looming, and your team is buried in spreadsheets with tasks like bank and payment processor reconciliations, journal entry prep, and cash flow reporting. But what if there was a better way? Ledge automates the tedious work that slows your team down, like high-volume transaction matching, journal entry creation, and even cash flow forecasting. Ledge glues all of your financial data together across your ERP, banks, payment processors, data warehouse, and more, and automates any workflow, no matter how complex or unique to your business. Get real-time cash flow visibility and make cash reporting and forecasting effortless while increasing controls and accuracy. And Ledge requires no IT or R&D resources. Ledge plugs right into your existing stack, so you can get set up in just a few hours. Imagine a world where your team can close the books faster with fewer resources. Imagine audit-ready data all year round. With Ledge, you can finally stop scaling headcount just to keep up with growth. Visit ledge.co, that's ledge.co, to learn more about how you can automate your finance operations without the heavy lift. Hello, we're speaking with Dan Murphy, CFO of Commercetools. Dan, welcome.
Thanks, Jack, and thanks for having me on. Really do appreciate it.
So, Dan, as you know, we're always looking for those experiences that prepare people for finance leadership roles. And so when we have someone like yourself in front of us, we can't resist. Take us back. What would you identify as some of those experiences you feel best prepared you?
So some of the experiences, at least from a career perspective, there's plenty along the way. But, I came out of school and I started in public accounting back when it was Ernst & Winnie and Arthur Young. So I started with Ernst & Winnie. Not funny, haha, but funny. They just happened to, I was hired by Ernst & Winnie, and then they consolidated into Ernst & Young just when I was about to join. So there was a bunch of uncertainty at the point in time. So I went into public accounting, and, from my vantage point, probably the 3-4 best years that I had, it was a great place to start.
Where were you located?
I was located in New Jersey.
Tri-state area of New York or Lower Jersey?
I was it was in downtown Newark, New Jersey, right next to the old Mutual Benefit Life insurance company, one of the oldest insurance companies that no longer exists, but one of the oldest insurance companies. And Prudential was also in downtown Newark. So I started there, and then soon after the consolidation, we moved out of Newark down to Edison, New Jersey, Metro Park, New Jersey. Worked on a bunch of different types of clients. I did manufacturing. I worked on hospitality, hospitals, which wasn't my favorite. That's when I first started to get exposed to software type companies, and I always found it intriguing. When I was just doing the audit and going through the audit process, I actually did insurance companies as well. So good rounding experience. And when I started to do software companies, and these were the first versions of just, computers were actually just starting. Funny story, when I first started at Ernst & Young, we didn't use computers, we used paper, and we had to go check out a computer to do a randomized sample. And then we had to write it into a green sheet, all the randomized sample, and then go do the work. And that's how we used computers back in the day. So we actually started doing some work around one of those software companies. And, my time at public accounting, while I appreciated it, I wanted to move a little bit faster and I wanted to be involved in a business. And that was the goal. So I left after 3-4 years and went to a company called Securities Data Company. And this was all about data and information, and a relatively straightforward and simple business. But this is where I kind of hit a couple of my key first things from just kind of understanding where I wanted to go and how I wanted my career to work. The first is from a data and information perspective. The structure of the business was, we would look at newspaper articles, industry magazines, and we would catalog all the data related to M&A transactions, IPOs, municipal bond offerings. In the past, this was all held by the bankers, and it would be released in a newspaper or an industry rag. And what we did was consolidate all that information. And this is where the advent of league tables started for investment banks. And we captured all that data. And we would call the investment banks and ask them to give our data in the beginning. And this was a small little company. It was about $5-6 million when I joined. And they wouldn't give us that information. They'd say it's confidential, it's private. But once we were able to start getting a decent set of information, and they started using that information to position themselves to their customers, they're number one in IPOs on the West Coast on Sundays when it rains, one of those types of league tables. But they're able to get all that information. Then they started pushing the information to us, and that's when the business really took off. And we grew that business very, very quickly. And at the point in time that I was joining, and there's a little bit of a theme here, they were in the process of being acquired by the Thomson Corporation, which is now Thomson Reuters. So Ernst & Winnie, Arthur Young come together, Joint Securities Data comes together with the Thomson Corporation. But I joined at the right time. The Thomson Corporation was in newspapers, oil and gas, and travel. That was their big businesses, and they were in the process of divesting of those businesses, investing heavily in digital assets. So as I was at Securities Data, I got a lot of exposure to different types of deals, doing, maybe not involved in doing the deal, but involved in the post-acquisition, the integration. And this is the kind of the important piece of when you start to learn how different companies operate and you're trying to bring them into not only from a cultural perspective, but also from a product perspective, and then trying to hit certain financial metrics as well. So the metrics and the measure and the communication of those were very important. Understanding kind of the levers that you could pull were really important. And we did a ton of acquisitions in the space. And what I liked about the Thomson Corporation when I was there with Securities Data is every 12 to 18 months, I was doing something different. And I always, would raise my hand, is there something else I can do, something different that I can do? And one of the things that I actually learned to do back at the Thomson Corporation was at Securities Data, our billing was manual. And this was, I know all the rage today is usage-based pricing. We actually did usage-based pricing back in the early 90s. You bought per data item, and we did a subscription business around the data items. So if you wanted cross-border M&A, if you wanted an IPO, depending on how many were involved, you bought by the data item, but we gave you a 90% discount if you paid a fixed fee on a monthly basis, and you got to use as much data as you would like. So that was the first kind of recurring subscription leveraging data. which was always exciting. So I actually spent 14 years at the Thomson Corporation in a multitude of different roles. And, as I talked about, the integrations were really important. I worked for a number of different general managers, CEOs of different businesses, and understanding kind of their work styles and how I could support them.
Is it M&A? Are you helping them integrate new products that they're acquiring, or what exactly are you doing?
It was more, some were products, more of it was data sets. So they were looking to buy data. I mean, again, some of these names are no longer around, but First Call, InvestText, CDA, these were all different types of data sets that were servicing, the banks, right? Financial advisors. And so those are the types of M&A acquisitions that we did. As another team was getting rid of travel and all the other business, and they were just taking their money, investing back in these assets. So pretty exciting time. And, the Thomson Corporation is where I got my first divisional CFO. I was responsible for a set or a line of business in the Thomson Financial Organization, which was great. But after 14 years and doing a whole lot of different things and getting a lot of different experiences and exposure, and again, raising my hand to do different things and understanding the metrics that drove the business, I wanted to go off and be a CFO of a business. And so I took a little bit of a different path. Throughout my career, you get the opportunity to meet a lot of different people. One of the key things is just continually networking and always, there's nothing against meeting a person that learning a little bit about what they did, learning about how they did it, and then making it your own becomes very important. So I became a CFO of a company called Marketing Technology Solutions, going back full circle to another small business that was about $5 or $6 million of revenue when I joined. And so I'm going from the Thomson Corporation, which is a multi-billion-dollar organization, down to a $5 million organization. And in that, again, the key was at Thomson, a lot of financial resources, a lot of people could do a lot of things. At Marketing Technology Solutions, a very small business, and every decision that you made mattered. And the key was, how are you making payroll? How are you allocating those funds to make sure you have enough funds to make that payroll or make those investments? So capital allocation, albeit small, became very, very important, and just kind of another key underpinning of a set of experiences that I had.
I want to just ask you about your transition there. In your tenure at Thomson, that was a very long tenure. At a point in time, did the CFO path become visible to you? And again, you said you became CFO of one of their lines of business. Or could you have gone another way? It seems to me that the nature of what you were doing prior to Thomson, you could have stuck in business publishing in some fashion. You were highly skilled at acquiring data sets, but also targeting audiences.
No, you're absolutely right, and I was there for a long time. And like I said, this is how kind of the career rounded out. I did a small little software company at Ernst and Young.
Yep.
Got into data and information and Marketing Technology Solutions when I joined there. And I could have stayed at Thomson. And, although I was there for 13, 14 years, like I said, I was doing something different every 12 to 18 months. So it was like I was switching my job every 12 to 18 months, either having to hire somebody and bring somebody else new in, build out a team, do an integration, work for a different general manager or CEO.
Would you characterize yourself as a troubleshooter?
No, I wouldn't. I wouldn't call myself a troubleshooter or anything like that. I would just, when something else came up, I was more than willing to raise my hand and say, "Yeah, I'll try it. Let me get a crack at it." And again, this goes back to what I was talking about networking and making sure, that I knew the right people in the organization to say, "Okay, well, there's this change happening here."
When you raised your hand, though, were they the people who said, I would love to have Dan on my team, give him to me for a quarter. I've got this special project.
No, it was either through a reorganization. It wasn't a special project structure, not like that. It was a reorganization. And, as you're buying so many businesses over time, you're putting pieces together, right? You're constantly putting different pieces together. Maybe you do an acquisition, you let it run separately for a year, and then after a year, you want to bring it in. And so, like I said, these were just a bunch of different opportunities for us to do this. And they were not, again, I wouldn't call them special projects at all. These were just continually kind of taking steps up and being able to do more around the organization. And that's, again, that's what I liked. And the key thing that I learned there is just working with different people. I saw their different styles. And by having exposure to so many different people, you see different styles of management, different styles of communication. And again, to me, the value was I could take the best pieces of each one of them and fit my style and bring it into my style and be able to then use it how I felt was the most effective.
And I'll point out you were at Thomson 3 years. And when you come out the other side of Thomson, you step into a CFO role for the first time at Marketing Technology Solutions.
I want to just point out to the audience, you were there 5 years. You ultimately are there 5 years. So I would imagine it experienced a good deal of growth. And how your resume changes from there forward, it seems like you've had a number of different CFO roles.
That's correct.
Thomson got you there, and then you invested 5 years at this first CFO tour of duty. So I have to believe it was a really important one, perhaps exposed you to the full suite of responsibilities.
Exactly. And this was, not the early days of the internet, but early-ish days of the internet. And, what we did was lead generation for pharmaceutical companies. And the reason that I liked Marketing Technology Solutions is they were using data to engage consumers. So I'm at the Thomson Corporation. It's all about data. And then we're using data to engage consumers to be able to identify, comorbidities and other things, double opt-in model, clean as could be, and using that information for marketing purposes. So it became a marketing engine around the pharmaceutical companies. And that's where, again, I was always curious on the Thomson Financial side, curious on the Marketing Technology Solution side. So I ran the operations group there, HR, legal, obviously the finance piece. I did consumer acquisition. I ran the technology group for a little bit. So I had the chance to run all these different components. And what I liked about that is it put me in that seat. So as a CFO, it just made me a better CFO of understanding kind of the day-to-day problems, the things that they would have to deal with, the issues that had to deal with. Efficiency became extremely important. CFOs always like efficiency, and they drive efficiency in their own groups, and they have suggestions maybe for other groups on how to be efficient. But I've been in that seat. I know what can be done. I know how hard it is. I know how easy it is, and the different challenges that go with it. So Marketing Technology Solutions was a great run. We grew the business extremely well, and that's where I got a flavor for just making sure capital allocation. While I was there, we did not raise any money.
Was the goal to take it public eventually, or
No, the goal was not to take it public. The goal was to just continue to grow the business, and at some point, it would be a sale of a strategic asset. So the goal was not to take the company public. They had good ideas when they raised the capital, and we executed on those ideas and drove the growth of the business, which was great.
Part of what you brought there was your wealth of understanding of pricing as well, as far as data sets are concerned. And if you're targeting these pharmaceutical companies and how am I doing? Am I close to, when you think about, they were trying to figure out their business model. How do we make money? How do we price this? No, or what would you tell?
Absolutely. I mean, it was, I don't want to call it an arbitrage model, but it was make sure you can draw as many consumers to the website as you possibly can. Mm-hmm. And you were paying, pick a number. These aren't the exact numbers, but you were paying $10 to get a consumer to come in and register in our database and answer a bunch of questions about themselves. And you knew, if they suffered from 2 health issues, that there was probably 3 or 4 that they qualified. So this is kind of the first view of inference marketing of saying, well, if you suffer from high cholesterol, then more than likely you suffer from heart ailment and or diabetes and or something else, whatever the comorbidities to healthcare might be. And so that was kind of the key piece. And then we would further then know that if this person, suffered from this disease, then we would try and qualify them for 3 or 4 other likely diseases. And from a pricing perspective, you're paying $10 for them to come in. And if you want a gross margin of 80 or 50%, let's just call it so we can do easy math, we'd have to sell that name for $20, $25, somewhere in that neighborhood. So that's why we wanted to do multiple qualifications of that person around that illness. So yes, from an arbitrage perspective, making sure we were bringing consumers in at the most cost effective, qualifying them as quickly as we possibly could, cascading all that information and really understanding that consumer. Like I said, this was a double opt-in model. So the consumer was fully aware of the information they were giving and opting in for. So yeah, it was the work at Thomson was invaluable, just understanding how data works and how you can use data to be intelligent about how you price and then how you make it efficient. Because you can cast a wide net on consumers, but if you're not finding the right type of consumer, it just makes your cost per consumer go up. And so, when we started looking at some of this stuff, we just tried to do it the best way we possibly could and make it as efficient as we possibly could.
When you leave, what are you looking for? I mean, you mentioned you didn't raise money at this particular company, Marketing Technology Solutions. Are you looking to get that experience? Are you looking to take a company public? What is it what are the types of transactions you're?
Yeah. So interesting enough, right? So many CFOs. I mean, the talk recently has been, path to profitability, and like it's something brand new, path to profitability. But if you lived through 2001, right, from a financial perspective, or 2008, you saw some, pretty key things that had to happen just around making sure you've got enough capital on the balance sheet to survive, and that you're not being, or you're being responsible with that capital. I think what are people calling it now? Responsible growth or something along those lines. I guess is the new the new talk. But that's something so many CFOs haven't experienced because there's been such a run from 2008. You can count 2012, 13 in there as well, but 2008 to now, it's been such a run. So long-winded way of answering your question. Sorry, Jack, but just from a Marketing Technology Solutions, what I was looking for next was, this is when software was really starting to, SaaS software was really starting to kick in. So I went to a company called Conductor, great company run by Seth Besmertnik, who is still running the company today. And I joined there, and it was, what they were trying to do was search engine optimization. So now using data and information to optimize search to engage consumers in order to have them transact. And it was a software platform that helped you actually look at the best opportunities for optimizing your SEO search. And they've continued to evolve, and now they're a marketing platform, which is the right direction for them to go. And I was there for about 18 months, based in New York City, traveling in and out of New York City, and great business. But when I left Marketing Technology Solutions, if I kind of had to look back, I love my time at Conductor, great company, love working with Seth, love working with the board there. And it was a good fit, but it was probably a little bit smaller than I wanted to be. And, my goal was ultimately to become a public company CFO, and Conductor was going to take a longer time to get to a public company, longer than I wanted to invest at that point in my career. So that's where I joined LivePerson. And LivePerson was a publicly traded company on the NASDAQ. I did not take it public, but that's where I joined LivePerson. And, that was my first foray into being a public company CFO and working with the team there. And I was there for almost 7 years. So I guess that's 28 public phone calls or, earnings calls. And not many CFOs lasted a public company 7 years. So it's a long tenure to last there. And I love being there. I love the action of it. I like the quarterly reporting of it.
And again, it's data, isn't it? LivePerson, isn't that about the?
And that was full, SaaS software and data and information. So you're just talking about the extension of the career, all just culminating in all of this stuff coming together of data, software, information, using it to engage consumers, which is, again, just a key piece. So, yeah, and LivePerson was, again, a great run, and did a lot of different things there. We did a couple of acquisitions, grew internationally, opened up Asia Pacific. I mean, there's all those things that I talked about, with either Marketing Technology Solutions or Thomson Reuters, they all came to fruition of kind of pulling things together at LivePerson, and also, again, doing different things that, international expansion, starting out, different areas. So all that was exciting to me, fun to do, and a great run. But then I took a step back after 7 years, and being a CFO of a public company is great. There is some stress involved in it, and so I wanted to do something a little bit different. So I wanted to go back to the startup type world and see if there's an opportunity to take a company public, and that's where I went to. Namely, where I was CFO and COO. So I had an operational title as well at Namely. And, again, good business, HR. They did HR software for the mid-market space. And, they were one of the first ones to modernize HR software. And they had a good first mover advantage. And the goal was to grow that business and grow it as fast as we possibly could. And we raised some money to drive that growth. But there were some changes in the business. And again, looking kind of at HR software in and of itself, it's a great space. Rippling is doing incredibly well. I think it's Dean, if I'm not mistaken, and there's a couple of other companies that are doing incredibly well in this space. So I think other companies kind of moved a bit faster than we did. So, time to do something a little bit different. So that's where I went to Uncork, and we did codeless software. Not low code, but codeless software. The goal was complete drag and drop and being able to build complex applications and for end consumers. And people start talking about tech debt, and anytime that you write a line of code, you're creating some level of tech debt that somebody has to now maintain. And if you're writing software over the years, at some point that software becomes a big ball of spaghetti or a big ball of rubber bands. And with codeless software, it's drag and drop, and you're able to build complex applications for your end customers. And we focus on the financial services and insurance organizations. So where I had some of that exposure back in my Thomson days, and again, kind of coming full circle, understanding the financial market, understanding insurance type customers, was great experience. And again, it was a SaaS platform that was had again great opportunity for growth and continues to grow. And that's where I was CFO and COO. So again, kind of maybe the traditional, non-traditional route of going in public accounting, lots of exposure, wanted to move a lot faster, took on a lot of different opportunities at Thomson, M&A, seeing different things, and then culminating in Uncork, and now where I am today at Commercetools. And fast forward to Commercetools. So I've been here about 8 months, and it's been everything that I've expected from a CFO perspective. And it's been a great business.
Well, we want to ask you about Commercetools. We might have a few more career-related questions for you a little later on. So fill us in. Tell us about this company. What does it do? What are its offerings today?
Yeah, so Commercetools is the leading composable e-commerce platform that sells to enterprise level customers, that solves complex problems for our enterprise customers and allows those enterprise customers to focus on how they want to engage their consumers versus having to worry about how they're going to manage the technology and run the technology and get the technology out. And, that can be highly customized, or it can be structured in a pre-opinionated structured package where you can go live relatively quickly. Or if you think you're more complex, then you can customize it as much as you want, leveraging our close to 350 different APIs. And we go where the consumer is. We can build the platform across the same experience across mobile, web, social, any device that you're talking about. And it solves for some of the kind of key, what I call ilities: scalability, reliability, and flexibility. And Commercetools has, done a great job of really just focusing on the market, solving those problems, and going up against kind of those monolith legacy providers and really giving a customized, fully customizable solution for our end consumer or end customers.
So can you give when you say customizable solution, can you give me an example? What would be a shopping experience that your tools have? And it doesn't have to be specific to a client, but what's an example of what the company does? Yeah,
there's plenty of different examples. So, you think about an e-commerce site, Burberry, for instance. Burberry is one of our customers, and they were on a legacy platform that they had built themselves, and they were having, just trouble doing feature development and getting new product offerings out there. So by implementing Commercetools, they were able to 5x their feature development around their structure and the solutions that they were pushing out for their end consumers. Audi is another customer. Express is another customer. So these are all customers that have an e-commerce solution, and they're going through, maybe they're brick and mortar. They want to create an online presence. Most of them already have an online presence. Many of them have built their own solution or are using SAP or Oracle or Salesforce. And, we're coming in and modernizing them with a digital solution from a cloud perspective where they don't need to worry about the technology. And this goes back to what I was talking about, that line of code becomes legacy. We're giving them a full composable solution where they can drag and drop and attach to our APIs however they want and to their internal systems to give a unique consumer shopping experience. And many of these customers, right, are looking for some way of differentiating themselves, and they differentiate themselves through the service and the interaction that they have with their end consumers. So that to me is a pretty key piece. And Dirk and the team, Dirk, our CEO, and the team, who was our founder as well, came up with this structure and this solution, leveraging microservices and APIs to really drive that efficiency for our end customers. And it's been successful. Started in Europe, and we've had incredible growth in North America. Matter of fact, I think this is the first year North America's ARR growth 2023 is the first year that the ARR growth for North America outpaced the ARR growth for Europe. So we had about 65% ARR growth in North America, which is higher than what it was in Europe at this point.
Can you give us maybe an abbreviated history of the company's capital structure?
Yeah, the capital structure is relatively simple. It's not complex. It started out as an independent company, and they worked closely with a German grocer to really help them modernize their stack from an e-commerce perspective. And Insight Partners came in 2019, and Excel Partners came in at 2021. So those are the two kind of key investors in the business. And the capital structure, again, is pretty straightforward. All employees have some level of ownership, but Insight and Excel and the German grocer Revi own, a decent percentage of it. So pretty straightforward capital structure and cap table.
And are those two firms, they own the company?
Not 100% of it, but they own, a decent portion of it.
And are you going to be looking to raise more funds in the coming year? Or?
As we sit here today, we're pretty well capitalized. I mean, from a business perspective, and this is what I was talking about a little bit earlier. It's a new phenomenon for some CFOs, but I've been through it a couple of times. Path to profitability, we're close to profitable, and we can turn those dials and be profitable if we want to. We're still leveraging growth. I mean, people talk about the rule of 40. From my perspective, I think the rule of 40 is an okay measure, but you have to put a little bit more weight on revenue growth, especially if you're a growing startup-ishy type company that still has plenty of opportunity to gain scale and get market. So to me, I think it's actually okay to continue to invest in the business to drive that growth. And we're growing at a very high rate, and we'll continue to grow at a very high rate in 2024. And again, people are calling this responsible growth. I'm calling it, how to run a really good business. And so we're making those investments that we think are key that'll continue to give us runway for growth in 25, 26. Just like anything, a salesperson takes 6 to 9 months to ramp up. A technology person, when you hire them, takes 3 to 6 months to ramp up. And if you want a product for 2025, you had to think about it in 2023 and start executing in 24 for it to be actual viable product in 25. Those aren't the exact timeframes, but you have to think ahead. And this is where capital allocation becomes so important for a company. You can't, again, maybe in 2018 and 19, you could throw a ton of things against the wall and something would stick. But I think you have to be much smarter and much more directed around that capital allocation to be able to drive that future growth, which is a key thing when you want to become a public company, right? You want to make sure from a public company perspective that you've got forecastability and predictability in the business. And that's not just about selling, that's about the product roadmap and the things that are going to continue to add value to your existing and new customer base and continue to expand that TAM.
We always like to talk about what we refer to as lines of sight. We know this is a SaaS company, so we're fairly familiar with the metrics. We're wondering, when you step into the role, which was last September, I guess, whether you thought there was a metric or a particular business dynamic that needed to be measured more closely or studied, educate the organization better about, raise the profile of. Is there a certain number or metric that you have gone out of your way to draw more people's attention to internally?
I don't know if there's a certain metric. I think, SaaS businesses are very well measured today, right? So, I mean, there are some very, very good measures around SaaS businesses. There's some simple ones, revenue or ARR per employee that are pretty straightforward. But if you think about efficiency and driving growth, that's a metric that, you can kind of easily anchor on. Software businesses are primarily people, right? There's some cost around rent and some other things, but anywhere between 70 to 80% of your costs are going to be tied up in people. So understanding that metric around people, not that I'll take responsibility for this, but our head of HR introduced an ENPS scoring mechanism around the organization, and that's understanding how our people are viewing the organization, their role, and their ability to have an impact. Which to me, I think is an important measure in which we start to push out. And the balancing act as a CFO, especially of a private company, is how much information do you actually share with the employee base? With a public company, it's all public information and it's all there. But with a private company, you're worried about it getting outside your walls. You're worried about how people will interpret it. You're worried about, do they really fully understand the data that I'm giving them? And, one of the things that over my career, I've probably loosened on a little bit more is sharing more of that information versus trying to keep it tight and keep it controlled. I think there's risk, of course, but I think there's more value to people understanding the levers of the business and the drivers of the business so that they can have an impact and have the confidence to drive decision making in the goal of getting to an output around that metric or around some of that transparency. So
that's a compelling thought. Certain numbers more visible to folks. Well, which number, which metric?
I will tell you just some of the ones that we have started to share internally is net dollar retention, gross retention, renewal rates. We even, with a portion of the team, not the full team, we look at, how much is up for renewal, how much we're actually renewing, and then we're categorizing, those renewals, from we've got a very strong net dollar retention rate. So our customers are coming back to us and buying more, which is a great spot to be in. And the key thing about that metric is it's a great metric for overall growth of your business, but you have to look underneath the metric and you have to bifurcate who's actually buying and why they're buying and why are some of the other customers not actually buying. So that becomes a key piece to us and something that, we've been talking about in the organization that will continue to help drive our growth in the business. And, not that I want to press the net dollar retention rate any higher than it is today, although that would be incredible if we could, but understanding why some of those customers may not be buying more, understanding what we can do better. Is it a product issue? Is it a service issue? Is it just they're having trouble internally? Are there things that we can identify? And to me, the CFO role has started to, not started to, it's always kind of been evolving, but it's not just reporting the numbers. It is understanding the numbers and being much more strategic in interpreting those numbers, what it actually means to the business. And this goes full circle from a career perspective of, if I didn't have the exposure to the different and responsibility for the different areas of the business that I've managed, whether it's from an operational perspective or directly managing it, it's hard it's easy for CFOs to kind of hide behind spreadsheets and say we should do this. But, walk a mile in a person's shoes, you can understand how difficult some of that is and some of the things, the nuances that are there in trying to execute on adoption, if you will. But we've looked at a bunch of different things. Time to value is a key thing. If you're going through a digital transformation, CFOs are much more involved in decisions around digital transformation. And what they want to know is, okay, if I do this, I don't want to wait 12 months, 13 months, 8 months for an outcome. I want return in 3 or 4 or 5 months. And so that time to value becomes very important in that discussion with the CFO. And again, from e-commerce or from Commercetools perspective, I'm talking to different CFOs of customers and saying, this is how we measure it. This is what we do. These are the key things for you. And being involved in that selling process. I don't consider myself a salesperson, but I do consider myself, a trusted resource that I can create a relationship with another CFO so they feel confident and comfortable making this decision, which, is just another way that the role has evolved.
I was noticing that you stepped into that CFO role we talked about at Marketing Technology Solutions nearly 20 years ago. So here you are again, another CFO role you stepped in 6 months ago or more. What I'm curious about is, as you've seen finance operate over time, the types of finance organizations that you have helped to lead, how has that organization in some way altered or been changed? It might be where, we don't we don't spend a good deal of money on all those accountants any longer, or what it might be. There's some fairly obvious areas that you probably have tweaked, but make a comparison for us when you think about stepping into the role last September. Here's where my priorities were, and they don't resemble what I was thinking 20 years ago for sure. I don't know, but I'm curious what you're.
No, it's a good question, and thanks for reminding me that I was a CFO, first job 20 years ago. It's making me feel a lot older these days. The role has, at least to me, evolved, right? So, 20 years ago, the key was making sure we had the accounting right, we were passing the audit, all that stuff that has to happen. That was kind of the priority, making sure then we're putting the capital in the right places. To me, it has evolved quite a bit. Not to say that that's not important. That is extremely important. And you have to have the right structure and the right setup to make that happen in the most efficient and effective way. So that's a key thing. But the evolution to me has become, coming full circle, really around data and information. And everybody says they want data and information, but that data and information is useless if you don't know what to do with it. And so the decision support aspect on top of that is very, very important. And so, from my vantage point, what's been important to me is I've kind of taken on roles. It's not just the finance piece, but it's the decision support. And whether that's run through your FP&A organization, and whether it's run through business intelligence or business operations or revenue operations, you're seeing more and more CFOs kind of take hold of that information to be able, and I don't mean to hide it behind a wall. I mean to democratize it and make sure that the people that are as close to the customer can make the decision as quickly as they possibly can. And with Commercetools, this is one of the things that, we've just reorganized. And, I not only have the accounting / finance group and FP&A, but there's the deal desk there. There's revenue operations. There's what we call data strategies, which includes business systems and business intelligence. And these are all those things of leveraging data to really help drive the organization and give the insights. And the key is being able to turn those insights into actionable items. And this goes back to some of the metrics that you're talking about. I do believe if you're looking at, as a company in total, if you're looking at more than 5 metrics, you're looking at too many. But I do believe each portion of the business should be looking at their 5 metrics that are important, that they have an impact on, that drive the overall top 5 metrics. So making sure that it's cascading is really, really important. So that's, where the evolution has moved. And again, looking for people who have more of a background, a cross-sectional background in understanding a business. I've hired FP&A people that haven't done FP&A before, but have done, strategic consulting. And so there's a little bit of a learning curve on the FP&A, but the value that you get is once they get through that learning curve and understand kind of how software works and the measures, the interpretation and the drive that goes through the organization becomes really important. And you spend less time on the financial planning and much more time in the analysis, right? That's the key in order to continue to drive the business. So that's, to me, that has evolved quite a bit. And AI is playing a role in that as well, especially in the finance organization. There are things that we're starting to test out and look at to see how we can make ourselves more efficient, more effective, and help with that decision support.
Excellent. We're going to jump. I'm running a little long, but I'll jump to the finance strategic moment question. I'd like to know from this path to the CFO office and beyond, whether you would share with us a moment of strategic insight that you've experienced along the way, whether it was an opportunity that you identified or a risk that you avoided. Anything come to mind when we ask for a finance strategic moment?
All right, so I'm going to give you kind of 2, Jack, and I'll give you one kind of quick one and then one long one. At least to me, and this is a little bit more recent with Silicon Valley Bank, we were banked at Silicon Valley Bank, and I've always had at least 2 relationships from a banking perspective. I actually like 3. I don't care how big a company I am, but I always like to have at least 2, if not 3. And so when I got to uncork, we had one, it was Silicon Valley Bank, and decided to actually put another one in place with JPMorgan, which was important. And, as things started to move, if you were just paying attention, and I always have, alerts, and I'm always looking for things around key vendors of mine, including my banks. And there was a note that came out. It was a tweet about a week and a half to 2 weeks prior to, things hitting the fan with Silicon Valley Bank. And I remember going to our board and saying, listen, I don't know if this is real or not. I have no idea. But in order to be safe, I'm going to move a chunk of our money out of Silicon Valley Bank and move it over to JP Morgan just to be safe. And I'll move it back if nothing happens. Board was okay. We moved that money. And I'm sure you have plenty of stories about this. But, when that weekend hit, I mentor quite a few CFOs and having discussions with them. One thing that I should have done a better job, just always have two bank accounts. They were stuck with one. It was Silicon Valley Bank. They were concerned about what they were going to do, where they could move their money. So not that was a seminal moment, and I went on that one about way too long, Jack, so I apologize about that. But to me, just kind of having that basis, really, really important.
Great one.
The other thing, at a high level, a seminal moment is, you come to a crossroads about, your background, and many CFOs come up the public accounting route. Many come out of the investment banking route, there's plenty of different routes. I actually, I don't think it matters which route you become out of. What actually matters is, and I did this throughout my career, what actually matters is what experiences do you have that you can put in your toolbox so that you can use that at any point in time for your next role and be able to communicate why that was an important experience and how that's going to benefit the next company that you're going to, or the next role, or the next opportunity. And my vantage point, when I started out in public accounting and went to the Thomson Corporation, my tool belt expanded exponentially. And that's the way I always thought about, my opportunities in my career. What else can I put in my tool belt that's different? And that's why I stayed at the Thomson Corporation so long, was because there was always some new challenge there that I was like, wow, this is a great experience. And accountants/finance people don't really like change. I embrace change. And I think if, the one key thing just from a career perspective is, if change is happening, lean into it. Don't be afraid of it. Lean into it. Sometimes it'll work out. Sometimes it won't work out, but you can't go in scared. You've got to say, if there's change happening, here I am. Here's how I can add value. Here's how I can drive the outcome. And I think that is what's been serving me throughout, at least my career. And that's the way that I always kind of think about things. What's in my tool belt? How can I use that tool belt? What experience did I have? And how can I correlate that experience to help this company get to the next level?
This episode is presented by Avalara. That's the sound of not worrying about sales tax compliance. Because when you automate it with Avalara, you don't have to worry about collecting sales tax or tracking who and what is tax exempt. With Avalara, you don't even have to worry about new tax laws and regulations. Avalara does it for you. If your business sells internationally, Avalara has you covered with cross-border tax compliance solutions. And when it comes time to file tax returns, Avalara automatically takes care of that too, giving you one less thing to worry about. Avalara has managed billions of sales for small, mid-size, and enterprise businesses, and seamlessly works with your current sales, e-commerce, and accounting platforms. Take the worry out of tax compliance with Avalara. Learn more at avalara.com. That's AVALARA.com.
We're going to jump to our mentoring round, where we'll ask you several quick questions intended to inform and inspire future finance leaders. We're interested in knowing about your first 60 days. And again, we're going to go back to that first CFO role 20 years ago. If you could go back in time and just tell that person something, again, this is your younger self, the first time you're in this role, there must have been something you just were a little surprised that the role involved. And you were like, this is what I have to do.
Yeah, so I can remember it like it was yesterday. So I left the Thomson Corporation, tons of people working for me, financial, the good financial structure, no problems at all. And I remember first 4 weeks, maybe 3 weeks in, calling up my wife, being at work, and my wife's not an accountant. She's on the service side, but I call her up and I'm like, oh my gosh, they're actually capitalizing garbage cans to try and make the P&L look that much better. How did I not know that, they were trying to conserve, or at least make the P&L look as good as it possibly could in this point in time? And, there's always been, and I can say this honestly, there's always been a question that I should have asked during that interview process, and talk about your collection of experiences. There's some questions that I should have asked going into marketing technology solutions. There's some questions I should have asked going into Conductor, to Namely, to Uncork. I can tell you at Commercetools, I think I asked every possible question, did as much due diligence as I possibly could. And I didn't have that, what I just call the oh no moment. Oh no, I should have asked that question, right? That's a question that I should have asked. And in each role, there was one. And at Commercetools, I've been here now 8 months. I don't think it's going to happen. There hasn't been the, oh no, I should have asked that question. So to me, my younger self is, make sure you ask all the right questions, no matter how small they are. Ask them what GL system they're running. Ask them what systems they have in place. Make sure you're reviewing the P&L. Take a closer look at the balance sheet and the underlying subledgers, and make sure you know exactly what they're doing, so you're not getting into something like, that doesn't make a whole lot of sense. So I think that's a key thing.
Great. Thank you for that. We'd like to ask our guests to reflect a little on the personal side. We're wondering if there's something most people don't know about you, something your work colleagues might not know about you. Anything?
I'm a pretty open book, I guess. I don't think there's too much that people don't know about me, but I guess, even prior to my professional work life, I always, worked, whether it was mowing lawns or, but one of my favorite jobs was parking cars. I parked cars at a restaurant, and it was amazing. The cars that you parked were sometimes nice, sometimes not so nice, sometimes dirty, sometimes pristine. And it was funny how the car actually correlated to the person getting out of it. And if it was a nice car with a pristine interior, that person getting out had a very nice suit on, very nice clothing, whatever it might be, and carried themselves in a certain way. Versus the messy car, where people presented themselves as messy. So I guess long-winded way of telling that story is, I worked quite a bit before actually my professional life, and there was always different things of just dealing with people, whether it was delivering flowers, mowing lawns, or parking cars, that you learned just how to really service people and make sure that their expectations were met, and ask them for feedback, because in most of those roles you're looking for a tip, right? And so you want to ask for that feedback, and you want to give the best possible service to that end person. So a bunch of different jobs as a youngster, I guess, is one thing that I would share.
Yeah, nice. Thank you for that. Wondering if there's a book recommendation or a resource you might offer our listeners, anything that you found useful or helpful, something you've read, something you just turned to.
I can't say that there's something off the top of my head from a book perspective. There are analyst reports that I read. There are blogs that I read. I think the gentleman that does Cloud of Judgment, especially on the cloud side, I forget the gentleman's name, does a great job. I think he always has a nice tidbit in there around SaaS companies, whether it's earnings or valuations. And, I think it's always helpful to just read somebody else's opinion and somebody else's, viewpoint. So I always look for that type of information just to inform myself.
The name that surfaces on Google is Jamin Bell, is the author of that newsletter, apparently. Cloud Judgment.
We're up to our final question, where we ask you to look forward finally, and we're wondering what your CFO priorities are over the next 12 months.
Yeah, they're actually relatively simple. So I've gotten through I'm through my 90 days at Commercetools. They're relatively simple. It is heads down and execution. We've had a great 2023, and we're gearing up for an even better 2024. So it's head down, executing, making sure we've got the organization structured in a way that can help us continue to grow in the best way possible. Making sure we're acquiring the right customers to come in the front door. And then making sure, I call it the plumbing, if you will, but making sure, the back office and the plumbing is ready for whatever our next step is, whether that's an IPO or whatever it might be. But making sure we're putting the right underpinnings in place without squeezing the organization too tight. And I think that's just an important piece of just making sure that the things are building towards an outcome, and you don't try and squeeze too fast, but you don't squeeze too slow. So that's what we're focused on. Very simple, very basic. But excited for the year. We've started off very well. We've got our customer event coming up in April, Elevate, April 16th to the 17th in Miami. And we'll have a bunch of great speakers, a bunch of great customers there. So looking forward to it.
Dan Murphy, thank you for joining us on CFO Thought Leader.
Thanks, Jack. Really appreciate it. Thanks for having me.
Hello, Thought Leader listeners. We hope 2024 is treating you well. If you haven't already, we hope you'll pay a visit to CFOthoughtleader.com and go ahead and subscribe to our Mentoring Round newsletter, where we highlight the career lessons and moments of strategic insight shared by our recent CFO guests. Also, LinkedIn users, please go ahead and follow our CFO Thought Leader company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.